Banks are now reportedly seeking relaxation on the Reserve Bank of India's draft regulations that would require setting aside higher provisioning for the financing of infrastructure projects. For those not in the know, RBI on May 3rd proposed that banks be required to increase provisions to 5% of the loan amount disbursed for the projects in the construction phase. Until now, this requirement was set at 0.4%. When the project becomes operational, this can be reduced to 2.5% and then lowered to about 1% once the project reaches net positive cash flow and repays 20% of the dues. And this is as per RBI's recent circular, which was which came to light on May 3rd. Now, according to media reports, banks are now seeking graded provisioning requirement for high rated projects. For example, for government projects with near zero default risk, the provisioning may remain at the existing 0.4%. For AAA rated projects, the provisioning could be somewhere between 1 to 5%, and for others about 5%. And Kranthi, again I'll come to you. What do you think will be the impact of this higher standard asset provisioning on the earnings of banks, apart from, I think, increasing the cost of fund for these banks?
Definitely, Suyash. It's a very surprising circular to the market. But what I can sense is RBI on a medium to longer term, they don't want to see any kind of excesses that are going to build up in the system, especially in the infrastructure financing is concerned. That's where it's a very proactive move at this point of time to slow down the pace of the action at this point of time. That's what I can sense. But the banks and NBFCs are going to represent to the RBI to further easing of the policy. We need to wait and watch, but it's a very proactive move where RBI is in a mood. They don't want to see any kind of extra excesses that are going to build up in the system. That's what the very proactive move RBI is proposing at this point of time. Throughout the world, Suyash, wherever the excesses bubbles kind of situation, we don't find any kind of trace of bubble or excesses at this point of time. But as a regulator, they don't want to give any chance to any kind of excesses in the system. So to keep the bank's books healthier, of course, it is going to impact the earnings of the companies in medium to short term, and also going to have some kind of impact on the boom what we are witnessing in infrastructure finance is concerned. We need to wait and watch. Still, some more moves that's going to emerge.